All right. So the biggest thing, and this is, I'm not calling out anyone specific, but for example, what do we not want? First of all, what are we not trying to do? We're not trying to do this. So you can see where it's like in, out, and just no idea what's going on, right? This is not what we want to do. What we need to understand is that not every strat setup is a setup we're going to take, because we need to time the broadening information and the signal and the continuity all at the same time. What's most important is the broadening information and the signal, because we can change continuity. So we don't want this. What we want is to have entries from the top or bottom of the broadening information and ignore the stuff in the middle. A common saying, especially Kathy, if you've seen her charts in the free side of things, she says, do not diddle in the middle, is what she says. And we do not want to be the person diddling in the middle, if that makes sense. So what does that mean? I'm actually going to open up TradingView instead here. So the futures are a great example of this type of, I guess, thought process, because they consolidate so much and it makes it extremely easy to see. Let me see if I can't, I forget which settings I was using the other day in here. I don't think we're going to do that. That's fine. Actually, it will do it. It should be, I'm only setting this up just so we have something or a way to view this that's going to make sense for everybody here. Or I guess a visual means to see what we're looking at. All right, this will show it pretty well. So what we mean by do not diddle in the middle, and before we even get to the chart, I just want to draw some stuff out, is price is going to make a move, and then what it will do is it will pull off the highs, attempt to make new highs, fail to do so, and then you are stuck from this high to this low. And what will happen is the price discovery is going to restart, and you're going to get this choppy mess. And when we say price discovery, what we mean is the broadening formation is going to start forming in here. So price will always move, create a new broadening formation, and then once that broadening formation resolves lower, expanding the range, it will go and take the lows of this. If it does not resolve lower and it resolves higher, it will take the highs of this. And that's going to happen every single time. So when we're looking at specifically futures, this is going to happen way more often because it consolidates more. But what that means is what we're looking for as far as entries go. This is something I coined as the box setup a couple of years ago. But what we're looking for is we want to see a previous range of price that's sideways, and we want to see them aggressively try and go in one direction, reclaim with signals coming from one side of the range, targeting the other side to give us our broadening formation. And given we know this, what you're going to see is we don't want to trade in here. We don't want to trade in this stuff. We want to trade when this range is nice and big, and we can look to reclaim and test the other side. Because the scenario 3 exists, it tells us price will fail one side and take the other, and that's how we gauge magnitude. So all this indicator here does is it takes from, should be going from midnight. It looks like it's not doing that right now. Let's see if I can't fix it. Oops. All right, 5. There we go. So for example, you can see in the overnight session, this is a range, right? All it is showing is from midnight to right before the open of the New York session. It's plotting out the low and the high of that range. So what you'll notice is almost every single day, what's going to happen is it will take one side, it will fail, and then it will take the other side. And this is pretty much every single day because of the broadening formation, right? So what this tells us is what we're looking for is not any of this stuff in here. We want nothing to do with it. What we want is once this nice, big, obvious range has formed, we want to see price take one side, reclaim it, and then attempt to take that other side. You can see in this case, they made the new lows, and they're not weak enough to stay down there. They make a lower high and then a lower low. And we're going to talk about market structure and how we think about that as well. But what you'll notice is this same concept of it's going sideways and then fail one side, take the other, occurs intraday here, where it's going sideways, and this is a broadening formation, 3, poke down, poke up, slight higher low, and this looks like a consolidation or a box or an inside bar, because it is. This is inside of a previous range. But what we want to see is it's going sideways, right? Up, down, up, down, up, down. Don't want anything to do with that, because this is hard to trade. Once that range increases in size, we want to see when price reclaims and starts coming back through it, because now we can gauge the magnitude and say, okay, lower high, reclaim of this range. You can see the inside bar back through previous range. This is what we're looking to trade. And it's going to be the easiest moves. The moves in here, where you're going not back through any previous ranges, sideways, this is where you're going to get absolutely murdered. Whereas in here, this is obvious and simple, right? So very important to understand. What we're looking for is a range, and we want to come back through that range, up or down. Now, since we know that to be true, we can use this to time entries into that range as well, entering on what we call triangle day out. And all triangle out is prices going in one direction. Actually, like this. It's literally the same thing. But all triangle out is normally when you have a strong trend, which obviously SPY this week we have not, but price will be going in one direction with higher time frame signals in force. It will start that new broadening formation for us. And then once we get this big move down, since the higher time frame is going up, let's say we have a hammer on the week and it is in force and it looks like this, and then this happens during that week, if we can get signals that reclaim this range, since the week is still in force, let's say we do this on a Wednesday, we know it can still keep going for the weekly signal. So we look for them to stop people out, get people trapped short, and then go the other way in the direction of our signal. What most people are doing is they are seeing this occur on a lower time frame. So they might see something like this occur on a lower time frame. And once it gets down here, they're like, stock's going down, right? Which is why this works. Because if you're not using multiple time frames, you'll look at this chart, doesn't matter what time frame it is, and you're going to say, that's a terrible looking chart. But since we know when price reclaims, it turns the worst looking chart into the best looking chart, or the best looking chart into the worst looking chart. When this reclaim occurs, we know exactly what we want to do, right? We know we want to take it the other way. It's a matter of understanding when is this going to happen, and when is it going to go sideways and then completely take out the range and not reclaim. And the answer to that is continuity. So for example, if we go to, I guess we could go to Zim. I don't want to go to it right now. Let's say we go to SPY, for example. This is one that we traded in the Discord, all over it. Same with the weekend and nightly videos. So we're all over it, all over. For example, we get a 2-2 week. And what we say is we don't have to be that first guy in there. Why? Because if it's going to go from here to here, we will get a triangled out entry to go and do that. So when we drop time frames, we know the 2-2 week, we know the magnitude, we know what we're looking for. Then you'll see, and these are smaller triangled outs because it's a really strong uptrend, but they go sideways and then boom, bright green on the week on Tuesday when the news comes out. So anytime we can get a lower low that reclaims through a previous range, we want to go after it. In this case, the best signal, and this is one we traded, was when it makes this low. You'll see if we go even a lower time frame, it'll make even more sense. It's like a 3-minute. You'll see this. Notice we range, we go sideways. It makes the lower low and then reclaims. And guess what? The week looks really good. So what is this setup called? The pivot machine gun, where all these guys with stops against this, when this goes 2-2 reversal, we're going after it. Now, the reason the strat works the way it does is because we understand, let's say we're looking at it and we're still trying to do it over here. We take this 2-2, it works a little bit, then comes back. This is why we have the tight stops. As you take the 2-2, you're walking your stop up to these twos, and then it hits it here and stops you out. So be it. Because when it does work, that stop won't matter. The same thing happens here. 2-2, it's the same condition. Goes reversal, 2-2-2-2, boom, pays for all your winners, or all your losers, going to the new highs, and now you have a winning position, and the week should keep going. Because the week is doing exactly what we want to see. And this confirms what the week is doing, right? So hopefully that makes sense. Is everyone following here in free? Just let me know in free trading chat or in the community chat. It doesn't matter. Are we following? And I'm going to show you some more examples of this. Awesome. Crystal clear. Good. So when we go to, let's say, McDonald's, this is an example. This is why we do multiple time frame analysis. So McDonald's, what is this? That's a range, right? And you can see they had the hammer, signal, boom, other side of the range. 2-2 signal, other side of the range, right? So the signal in here, it tells you it's reversing. It does not tell you have to take it right there because we don't have to be the first one. So now let's look at this rev strat. You'll see the 1-3-2 here. You'll also see the 2-2 in here. We'll just go down into this one. So if this hammer month is in force, anytime it's above 263.56, we want to reconfirm that. What is that going to look like? Well, it's going to look like it's going up. Then you're going to get a triangle day out, and then it's going to go up again, right? So when we go to a lower time frame, we can go to a daily chart. It's going to be the simplest way to see it. You'll notice it puts, this is the beginning of November. Inside day puts the month in force. You can go after that, but we'd prefer to wait. Then you get a 3. That's a broadening formation. And you can see this is what's creating that range or that broadening formation that you're going to reclaim. So this 3 occurs, right? And then it goes 2 down again. It gets bigger. And then it goes 2 down in green, reclaiming it. Guess what? There's your triangle day out. Hammer signal after stopping people out of their longs, after trapping people short, back through a previous range to target these guys at 270.05. And then you'll see pokes down, it reclaims the range, and then up they go. There is a 3 in here, but that's also triangle day out on a lower time frame. They stop these guys out. The month is still bright green, still in force. And then they go the other way back through that 3. And then you can see again, they stop people out here, continue back through the range, and then this is happening over and over. And you'll see the broadening formation starts again, where they go sideways ranging in here, and they reclaim it, right? So when we're looking at charts, it's this simple. We want a bigger time frame that looks like a reversal back through a previous range. Let me see if I can't get the color in here different. That occurs down in here on a bigger time frame, like a quarterly, yearly, monthly chart, targeting the other side of the range, since we know price does that. And then within there, we want to see the triangle day out with reversals back the other way to cause that bigger time frame to work. And this is why continuity is important, because when you're doing this triangle day out type of movement, the month continuity is normally in your favor. The other thing with continuity is it tells you about aggression, right? It tells you, is the buyer or seller more aggressive? It does not tell you price is doing a specific thing. It tells you who's more aggressive at this point. And that's why control is important to understand. Because if the month, week, day, and 60, they're all green, and then in here the 60 flips red, it still does this against the month, right? Even if the week's green, it still does that against the week. Why? Because when you're going into the highs, those aggressive buyers, they're all buying, right? Eventually, they've filled all their orders, or everyone that wanted to buy has bought. So what we have to do is we need to go against the trend, right, to make the uptrend. Because if we're going to go up, it's going to have to go highs, higher lows, higher highs. So if they're going to make a higher low, it has to go down first on these lower time frames. So you can see in the case of this big trend, it's high or low, lower high, higher low, higher high. If we zoom in, high, lower low, lower high, change in trend, higher low, lower high, still going down, lower low, and then higher high, which is your broadening formation. So hopefully this is making sense. So when we look at McDonald's, it's just a great example of that. And if we just exit the replay mode, you can see, we go back in here. They have the triangle day out, hammer back through previous range, up, triangle day out. They try the hammer, doesn't work. We don't cry about it. Why? Because we know we can go and do this over and over, and eventually when it does work, it's a home run. 2-2 right here, you make all your money back. 2-2 against, they're stopping people out. 2-1-2 reversal, doesn't work, so be it. 2-1-2 reversal, awesome. 2-2-2-2-2 pays for any loss you took. 3-2 back through this previous range, pivot machine gun, stopping them out. 2-2 goes inside, so maybe stops you out, so be it. Inside up pays for your stop out. And then 2 go 3 may stop you out again, and now we're getting stuck inside. So you're going to see the 3 you'll notice we get stuck inside that previous range. So this move, and now we're inside of it. So they poke up, they poke down, inside bar back through that previous range. There we go. Now we're up, and away. We pay for all of our stops and then some, right? It's over and over. It's going to be the same thing. What most people do is they will get stuck trading inside this range, when it's still small. Because what it's going to look like first is it's going to look like you have this trend, right? High, higher low, higher high, higher low, and then it fails to make the new high. So it's still trending up, and then fails to make the new high. Boom, now you're stuck, right? Unless you take this low out, you're stuck within this range and this range, which is what causes the new try. So they poke up, slight lower low, still stuck, back through the range, makes the higher high, reclaims it right here, still stuck, 2-2 reversal, boom. Now you take out this whole range in one go, and then the big move occurs. So the next thing I want to talk about is, when is this big move going to occur? It's going to occur when you cause traders to take a loss. If you've traded things like ICT or traded things like order blocks, market structure, that type of thing, it's going to be a similar concept, because yes, like when you look at a chart, it's like, does this look like an order block if that's the definition you're going for? This thing. Sure, right? But the thing that people are missing here when they try and define order blocks like this is the fact that if price comes back here, it could have full time frame continuity up, and that order block doesn't matter. We're going to take out all these highs, right? Which is built into these strategies and whatnot. But if you think of it in the sense of not an order block, but the fact that these guys are long, and if this 2-2 reversal goes to the other side of the range, which we can define by the broadening formation like so, when this reclaims and starts coming back through, these guys are going to take a loss, right? If this 2-2 works, we're going to take that out, and then those guys are screwed. So what happens? The 2-2 hits its target, hits the next target, takes those guys out. Those guys are screwed, puke, right? And then you start stopping out all these guys to the left. So it's important to understand that. Now, for example, you can see when this goes 2-2 reversal, all these shorts, where are their stops? Against this stuff or where they got in. So when this goes 2-2, it is trying, you can see the slight lower low, it's trying to do that. The continuity at this point was red, which is why this doesn't work, but it goes 2-2 hammer, hits its magnitude, trying to go up. And then notice they fail to make the new high to this. So they make a lower high after a lower low. What's the next thing if that's a trend, right? High, lower low, lower high. What does that tell you? Well, if you bought in here and this 2-2 goes to its magnitude and takes this out, these guys are the losing trader because the shorts can stay short. We did not take out their highs, right? So it does that, 2-2, takes 2 days, takes it out, and then whammo, boom, boom, boom. Everyone's a losing trader. So what we need to see is we need to see traders take a loss, right? And you can see in here. When this goes 3-2-2, did any of these traders in here take a loss in this red bar? No, they did not. Does not work. It tried, but it did not work. Gap up, and they bring it back in. So then all the long traders in here, they take the loss, right? Didn't fully take it out. It was a 98% retracement. And then 3-2-2, guess what? These guys in here take the first loss. These guys take the second. These guys take the third. And then if it stays up there, it continues because green gets greener. Make sense? So you can see the signals make way more sense now. So these guys buy the gap down. They're long against these lows. You get the double inside down. It's trying to make the new lows. It goes inside down. It reconfirms it, trying to make the new lows. And then the inside bar red gets countered back through this range. These guys take a loss. These guys take a loss. This is the PMG. So they make a higher low. They attempt to make the higher high. They fail to do so. So these buyers were too weak, right? You stopped out all these shorts, causing a big loss. They were too weak to make the new highs. They attempted the 2-2 back down, failed to cause these guys to take a loss. So make another higher low. 2-2 back up. 2-2 back down. Causes a loss to these guys by hitting its magnitude. Now it's going down. Guess what? PMG. Boom, 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 boom. Where this 2-2 triggers this, and then it causes the rest of these guys to take a loss because you're finally causing all these traders here to take it, which causes these guys to take a loss, which then in turn causes the gap down buyers in here to take a loss and then puke. And then everyone's short. Inside bar up causes these guys to take a loss, which causes the next guy, causes the next guy. And then we're nowhere near causing this guy to take a loss. And you see exhaustion risk is what we'd call that. We have no pivot targets. 2 reversal, and now this buying is done off the lows, right? Now you can see these guys are taking a loss. They go at 222, cause this to take a loss, cause these guys to take a loss, etc., etc. So it's causing those losing traders that matters. So when we go to things like SPY today, when we get the initial gap up sell, is anyone taking a loss here? They're not. The ideal scenario of the gap up is that you're going to gap up, reclaim the previous range, which they did, right? And then you get the sell for 60 minutes, the first 60 a day, the puke. And then we need this 60 to cause these guys to take a loss, to cause these guys to take a loss. So why does some gap up sells not work and some do? Because of this exact thing, right? So when we take out low of day and then fail to go anywhere, if we go to a lower time frame, you can see they attempt the reversal, fail to take any of these guys out. So they try to make the lower low. They were too weak of sellers to do it. This 2-2 causes these guys to take a loss, which causes these guys to take a loss. Whereas anyone that bought off low a day, they tried to take them out and they couldn't. So the last thing I want to cover is when it comes to market structure, what does it mean? So since price is constantly trying to make new highs and new lows and do a broadening formation, what will happen is eventually this range expands because the broadening formation will expand down or it will eventually expand up. So market structure, all it's identifying is when were these sellers or buyers too weak to make the new low or new high. So if we have this broadening formation, they rally it all the way up into here, and then they reverse and they make a lower high in here. What that tells you is these buyers in here, they're screwed. They were too weak to take out this seller, right? So when it reverses, continuity changes, and they're coming back down again. Now, these buyers in here are the losing traders you're going to cause, right? But the thing that's important here is if this triggers and it fails to take the low out, meaning it goes 2-2 reversal, and it's coming down, and then it goes inside bar and then firms back up again. Now, when that occurs, and we're just going to draw it out like this. So it goes up. We'll just say it's a 2-2 reversal in here, below this. And then that reversal continues, and then 2-2 reversal against. Guess what? Now you're stuck inside because the sellers were, or the buyers were too weak to take these guys out. And the sellers that were previously really strong were too weak to take these guys out. And then this is where you get absolutely wrecked because you're trading within an equilibrium. So notice, you're going to have a range. You're going to attempt to take one side out, fail to do so. Attempt to take the lows out by having weakness of the buyers or sellers, fail to do so, and then broadening formation price discovery will restart. And this is where everyone gets murdered. So if we go to the futures in the overnight session, this is mostly what's happening. So we can see the previous day. We're just going to mark out some highs and lows here. So you can see they made the new lows and they made the new highs. So the sellers are aggressive enough to make the lows, buyers aggressive enough to make the highs. Sellers come in here, attempt to make the low, right? And then they reverse. Where's it now trying to go? Back to the highs. They attempt to do that, and now they form the lower high, which causes what? Broadening formation. You can see something like this, drawn right to left. So once that's occurred, now you're stuck inside this range. How are you getting out of that? And you can see they chop. They try to make the highs, fail to do so. Try to make new lows to all this stuff, fail to do so. Try to make the highs to this, they're too weak to do it. So the sellers, all these buyers in here, screwed. Lower low. Then they do make the slight lower low to this, but they're still too weak of sellers to take this low out. And then you can see they reclaim that range, make a higher low in here, then the higher high, and then the higher low, lower high, higher low, higher high, higher low, higher high. So if we were to just draw this out as the range, all this range gets stuck inside. We can go like this. Looks something like this. They make the slight lower low and reclaim it. Where is it attempting? The other side. As long as this low is not taken out, that's where we'd like to see it go. And it's because we are stuck inside of this stuff. It starts really small. This is where the broadening formation started. Up, down, up, expansion, expansion. And then again, it restarts again because you're still stuck inside. Up, down, then tries to go back through that range. And you'll see over and over, the same thing is occurring in here. We get sideways range. Here's your 3, your broadening formation. They make the low, they reclaim it, other side of the range. Then you'll see they try and sell it off the highs. These sellers were too weak to make the lows. They try to buy it. Buyers were too weak to make the highs. Here's your new range. And then you'll see again, they try to make the lows of this range. They try to make the highs of the range. They can't. Here's another range getting stuck inside. And you'll see they then reclaim it, 2, 2, 2, 2. Then they expand outside of this one. This was a higher low, yes, but this reclaim of this smaller inside bar range. And you'll see they go up. Then they try to sell it down. What are they trying to do? Take out these lows. They fail to do so. And you'll see they actually did that here. So they try to take it out, failed to do so, try to take the highs, failed to do so. Here's your new broadening formation. And you'll see in here, they try to take the lows. Even if they took the highs, they're nowhere near taking these guys out, right? So the range gets bigger, fails to make the highs. So they make the new low. And then they reclaim the range here, make the highs of the range, still unable to take this out, right? We're nowhere near doing it. Then they make the high. And you'll see the same things occurring in here. Sideways. This is like really small stuff since we're looking at pre-market session. But sideways, slight lower low, inside bar reversal, pivot machine gun. Notice how if they reclaim these two bars and they go here, it could trigger here. And if it triggers that, maybe it can finally trigger these, right? Whereas when it reclaims this, if it's going to go here, it's still nowhere near taking this. So this is where when we say we want to use smaller time frames to trigger bigger time frames, this is where that comes in. Right? He's like, if this little small time frame works, it takes this. If that works, it takes this. If that works, we're a lot closer to taking that out again. And then you can see they do, and now it's no longer stuck chopping around in here. Instead, it's expanding the range bigger. And then you can see they buy it, 2-2 reversal. What are they trying to do? Come back into the range. And when we look at the bigger time frame, you can see the much bigger broadening formation. It looks like this. So when that 2-2 occurs, they're trying to take the lows of this tryout. They attempted 2-2 against in here. They were too weak to make the new lows. They tried to make the highs, too weak to make new highs. Tried to make the lows again, too weak to make these new lows. So you can see again, it gets stuck inside. And what's happening right now? Well, you have this 3, the poke down, reclaim, slight higher high. And now they're going to try, and you can see the 2-2-5er that reclaims the range back through. And at this point, it would be a Rev Strat 60 on that stuff. So we go to SPY again. You'll see the range looks something like this. The high, the low, stuck inside of this stuff, slight higher high, reversal. If that reversal does not get reversed against, it is attempting to take that out. If it does, so be it, right? Let's say it makes it all the way down here and then you get a 2-2 reversal. So be it, cover half or most of your position. But if it doesn't, and it just goes right to the lows, which it happens all the time, notice in the morning here, the gap up, signal, puke straight into the lows, and then they stop some guys out. 3-2-2 fails to hit magnitude. What does that tell you? These buyers were too weak to make the new highs to the magnitude, so they make the new lows, right? And that's where continuity comes in. When the day is really red, this 3-2-2, you can play it for 5 minutes, but when the new 5er opens, it changes control back to the day and 60 guys, and then down they go and make the new lows. Yes, so when we're talking about using smaller time frames to trigger bigger time frames, it is simply using the broadening formation of a smaller time frame with a signal. So we say we're looking for signals, right? To trigger the broadening formation or the signal of the bigger time frame. Because when you take signals, you're taking a broadening formation. Every single candlestick on here creates a broadening formation on a lower time frame. So we need to see price take a signal and stay out, right? Because as I've shown you, when it does not stay out and it reclaims, the move is actually bigger the other way, which is why the 3 is so important to understand. It's like when it tries to take this high of the range, this range out, and it fails to do so and it starts reclaiming, this move here, which was like not even 50 cents, this move here is like $3, maybe 4, right? So whenever stuff reclaims and fails, the move is actually bigger. You have more evidence, which is why we're trying to show what you want is range. You want to fail one side. And then in this little box in here, what you want to look for is range on a smaller time frame. Then you want to fail one side of that range. So for example, we can look at SPY, the big puke off the highs in here. You can see prices ranging sideways, sideways, sideways. Poke down, reclaim. What do? Take the other side out to the penny. It's like, how do you know that, Alex? It's like, well, look at this is all sideways stuck inside of this. right? So it gives you the levels pretty obviously. They make the lows, they reclaim. What happens in here? This is your triangle layout. 3 broadening formation, makes the lows. Here's the broadening formation in here, right? And then the 2-2 reclaims back through some of this range. The inside bar reconfirms that to add to your position. And then what does that trigger? It triggers anyone short with stops against this. All of these shorts in here, they have to buy to close here, which triggers these guys to buy to close here, which triggers these guys here, and etc., all the way up to the left. So we're back through a previous range, reclaim, and all the way back through. And then the same thing at the highs. Makes the new highs to the range, 2-2 reversal. Now it's reclaiming, coming back through the other way, right? Then you can see the slight triangle layout, then the new lows. And then even during the intraday session, sideways. Notice all this action gets stuck inside of this stuff. Slight lower low, reclaim of the low, takes the other side. Did that change or take out any of this other range, like this high or anything? No, it's nowhere near doing that. Then you can see it goes sideways again, reclaim, takes out the lows, fails to make new low a day. So they try and reverse it to make new highs, fail to do that as well. So they're starting to get chopped up in here. They make the new lows again. Now this range is bigger. 2-2 reversal, pivot machine gun of these guys. 2-1-2 continuation. 2-2-2, which is the shotgun continuation, makes the highs to this, right? You can see when that occurs, we're still nowhere near taking this high out. So guess what? We're going to remove the drawings. From this high and this low, you'll notice this is all still stuck inside of that, right? So this broadening formation is still broadening. And it makes the highs, comes back in, lower highs, lower lows, lower highs, lower lows, makes the new low again, and then reclaim again right in here, causing these guys to take a loss. And then you can see this is prior to the news, so they're kind of chopping them up. They try to take out the other side of the range. They failed to do so. So these buyers were too weak. Then they try to reverse it, and the sellers failed to take the lows. So here's your new try, right? And then price discovery restarts, and you'll see it gets really choppy in this stuff. Does this make sense? So like now, when we go to Zim, why would I want to short Zim earlier in the week? Well, we have a kicking pattern on the 2-day chart, right? 2-2 reversal. That occurred with full time frame continuity as well since the new month opened. So the month was red, the week was red, 2 up and red actually, gap sell on the week. And the day was red all day this week besides Monday. So when this goes and reclaims this level, we know exactly what we want to see, right? We want to see it go down there. And you can see just how many times this has occurred. Slight higher high, 2-2 reversal, boom. 2-2 reversal, 2-1-2 add, continuation, boom. Inside bar continuation, they blow out the highs, exhaustion risk. 2-2 reversal, boom. Right? 2-2 reversal here, boom. Inside bar reversal, boom. 3-2-2 here, boom. 3-2-2 in here, boom. Right? So it should make sense. And then in here, you're like, Alex, this strat doesn't work. I took this and I took this and I took this and I took this and it didn't work. It's like, well, you're chopping yourself up, my friend. Right? It's like, let's see, slight lower low, 2-2 does not work. They make the new low. 3-2 reversal never went. It went in force for maybe half a second, right? And then nothing. 1-3 rev strat. Okay, now we got something going on, right? Makes a slight higher highs to this. Inside in red, they start bringing them back in, and they're chopping them up. Notice from this low, they did not make the new low. That matters. So within this range, where is it stuck? This is your broadening formation. And then it gets bigger. They fail to make the new low to the broadening formation, so the higher low, these sellers were not that aggressive. And then they're still chopping you up, right? Within this range. They try the 2-1-2 here. Goes up. They go inside. Then on earnings, they gap up. And now notice how big this range just got. I'm not sure if it made the slight higher high in here. Makes a slight lower high. So this broadening formation, it still looks something along the lines of this. Drawn right to left, we'd go something like that. So 3, higher high, higher low, right? Sellers were not aggressive. Higher high, 2-2 reversal, back through the 3. Lower low, 2-2 reversal, back through the bigger 3 now. 2-2 reversal, back through the bigger 3 again. And the problem is when you trade the really small broadening formations, you get killed. It's like if we go to Boeing, and this is why it's so cool to know about the broadening formation, is they grow. They get bigger. So we go to Boeing. Let's analyze the Boeing chart. First off, we know we're stuck inside mother bar on the year. This is actually a monthly mother bar. We've been in this for 4 years. This is why it's important to understand. So what happens? They try to make the low, they fail to do so. They try to make the high, they fail to do so. So you're stuck. Boom. 4 months where you get absolutely wrecked. Then they make the slight lower low to the mother bar here. Reclaim with full time from continuity, the month, week, day, and 60. Pivot machine gun of these guys. Takes the other side out. Guess what? That was still too weak to make the new highs to this. So you're still stuck. 2-2 back down. They tried for 1 month. Continuity changed, making a higher low. So you have broadening formation, higher low. So we're going to make the higher high again. 2-2. And then still too weak to take these guys out. So you're stuck. And then notice chop shop of death. You just get killed in here. Right? And then eventually there is signals that cause this to move, but you get wrecked in here because all of this is stuck inside of all of this, just stuck inside of the yearly mother bar or the monthly mother bar. So you're trading a double inside bar at this point in this range. Then what you will see, this is the broadening formation we were identifying, right? The lower low, higher high, back through the range. It's just a grind, right? Boom, lower low. Awesome. Redraw right to left. Notice we're still stuck inside of this range, but it got bigger. 2-2 reversal. Tries to get it up there. So we're in. 2-2 against. Reduce our exit. Boom. Hits its magnitude, but does not make a lower low. What does that tell you? These sellers are screwed. They were not aggressive enough to make these lows. 2-1-2 reversal signal. We talked about this in 2022, actually. 2-1-2 here. Boom. All those sellers turn into a losing trader above this stuff. So now where is it trying to go? Technically up here, right? But we're still in inside years, so we got to be aware of that. Up, up, up. 2-2 reversal against. They make a lower high, failing to take these guys out. They make a higher low, failing to take out any of these guys. So they start chopping again. And you can see poke down, poke up, fails to make the new high again. Poke down, fails to make the new low again. So this is now like double inside bar in here, or actually inside bar in here. And then 2-2, they finally make a higher high, finally get out of there. But now their broadening formation looks like this. It's gotten bigger, right? But it's still small. It's still completely stuck into what? This and this. Completely stuck, this thing. So poke down, poke up. Here's your compound 3 that forms. Broadening formation. Then it gets bigger. 2 up in red. Changes continuity back into it. Reclaiming the highs back in here. 2-2 reversal, pivot machine gun. They take out the lows. So now the broadening formation got bigger again. 2-2 reversal again. Boom, the other side. Right? Still too weak to take these guys out. So guess what? 2-2 again. All these buyers in here take a loss down into here. And then you'll notice they try to recover, but way too weak. They weren't even able to get near where that entry would have been. Right? Inside bar, up, 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 boom. Monthly pivot machine gun, down they go. And now this broadening formation is into expansion if this can stay down. And they're going to try and take these guys out. Because we can see the high, the low, lower high, and then lower low would be there. Where these buyers were too weak to take this out. Does that make sense? We should have a party when the yearly mother bar busts. Yeah. Well, I mean, if their planes keep coming down and their doors keep flying off, then I bet the stock's coming down too, right? You can participate however you want. You just have to understand the asset you're trading. Futures, you can have infinite loss. Options have infinite gain and capped downside, but they expire and go to 0. 66% of options trades are losing trades. Because if it goes sideways, you lose. If it goes in your direction, but not fast enough, you lose. If it goes against you, you lose. So 33% chance of winning on options. If you are not managing the risk in a very tight manner. If you're trading stock, you can hold it forever, which is where the things like Meta on the quarterly, you can see how that works. Here's your big range, sideways. Poke up, shooter. 2 down, lower high, lower high again, lower low, boom, boom, boom. 2-2 reversal, back through the range. These guys take a loss, these guys take a loss, these guys take a loss, all the way through, right? If you go to like Amazon on the 3-2-2 month, we talked about earlier in 2023 or the end of 2023, 3-2-2, boom, you get to hold that as long as you want. That's how you get investments. You can see the 3-2-2 in here and did the same thing. And you'll notice Amazon sideways, down, reclaim of the big levels. 3-2 doesn't work, but it makes a higher low, so we can still go after it. 2-2 works, boom, there you're in. 3-2-2, add to it, you're in. Higher all-time highs, now we don't know. And you can see we have this big sideways range. So when we're looking at that 322 that occurs in here, what is that doing? It's reclaiming that, right? All these shorts in here, they're taking loss. These shorts in here are taking loss. So we use the monthly guys, triggering the yearly guys, trigger the all-time high guys. And you can also go in here and use the weekly guys. You see the rev strat week caused this to happen. Sideways, poke up, poke down, stuck inside, poke down, rev strat, other side of the range with the monthly signal as well. And you can see a slight triangle out, triangle layout, slight triangle layout, 3-3. Right, and then once they make the all-time highs here, they get bigger triangle layout, profit taking. And now at all-time highs, poke up, higher low. So what do they do? Higher high, 2-2. Whammo, takes them out. 3-2-2, fun to say, fun to do. Up they go. 2-2 against, but it doesn't make the new lows to this, so the sellers are weak. 2-2 up, does get countered, but again, too weak to reverse this stuff, higher low. New week opens, 2 up again, still going up, 2 up, 2 up. And then 2-2 here, they're too weak to make those highs out at this point. And at this point, you're going to see we're stuck, where this is a 3 outside bar to this range here. And we're nowhere near the highs, nowhere near the lows, so how are we getting out of that? So when we go to the futures, this is the last thing we'll cover. But actually, let's just make a quick thing. So what we're looking for, fail one side of the range, take the other. You can either draw it as a box or you can draw the broadening formation out where you may not have a box, but you can gauge the magnitude of a broadening formation. The other thing is with the broadening formation, since the ranges get really big, it might look like this. This might be the broadening formation you have, right? It might not look like just a sideways range. But when this reclaims this, it's going up there. And an example of that would be PLTR, which is closing in on the magnitudes. Everyone made fun of me when I posted this, so it's really funny. See if we can't find her in here. So here's the broadening formation on PLTR. Notice it's not really a box. It's a broadening formation though. It makes a higher high and a lower low to this range here. So when it reclaims this above $10, where's it going? Up there. All right, so if we go to PLTR on the year, you can see the quarter looks like this. It is a 1-2-2 rev strat quarter pivot machine gun, which reclaims the low of this outside year or outside quarter at 887. 2, 2, 2, 2, 1, measured move, 2, 2. It's going up there. So you're not always going to have this really obvious broadening formation, but just understanding it occurs. If it reclaims a range, it's trying to go to the other side. That's the most important part. The next thing. So we understand we want something like this, right? Reclaiming a range, up or down. We can also draw the broadening formation out. The next thing we want to understand is when this move is occurring, since you can gauge the magnitude, you can zoom in to a specific part of this move over here, for example. And I want to actually go to like a 60 chart so I can draw this out in a better way. When this move is occurring from here to here, you can zoom in on that. And you can look for triangle layout entries where it goes down, sideways, poke up, down, sideways, something like that, right? You will get measured move continuation, which looks like sideways. Maybe they have a slight triangle layout, but they fail to make this high because they're just so weak, and then down they go. And that's where, even in this measured move continuation, when we zoom into it, you do still get your triangle layout, right? It's just really small. It might be on a minute time frame if it's a 15-minute inside bar, right? So just understanding, we can gauge the magnitude with what we've talked about, and then we use a triangle layout to get in. Most people, what they do is they go in and then they try and sell low a day in here, and then it reclaims and they get blown out the other way. Not what we're looking for, because that's what a buy looks like, right? This is what a buy looks like. So why would we short it here when the move against us could be 5 times bigger? Doesn't make any sense. We want to short it somewhere in here where the move against these guys is going to be 5 times bigger, right? So the failure of a range is always a bigger move. And then use that across multiple time frames. And I'm trying to think if there's anything else I want to cover. Yeah, we could go to ES and just take a look at some examples of how this is going to repeat every single day. So again, this is just it's showing the session of the pre-market, so I don't have to draw it out over and over. But you can see, for example, new high, fail, lower high, lower low. Boom, takes out both sides. New low, aggressively reclaims. This is textbook, just like we were talking about. Boom, right here, higher high. And you can see in here, so it doesn't make the new high to this range, but you can see in here the sideways, higher high, lower low. Sideways. Does not make the low. Higher high, reclaim, lower low, and it does it again. Whenever you have news events, it's going to happen more than once. So you can see up, down, and then up again. Range, sideways, higher high, reversal, pivot machine gun, lower low. Then you can see the triangle after it again at the close. You can see in here. Did not make the new highs, but you have the sideways range in here. Higher high, rev strat actionable signal, lower low. Higher high, reclaim, lower low. Lower low, rev strat, higher high. Example of a failure, right? You can see they're chopping them up in here. Higher high, exhaustion risk gets hit in here, and then it reverses, which makes a higher low to this low, right? So guess what? They try and make high a day, and they're too weak, and then death, right? But we know how to not do that now, right? Good. And you see this one's a little bit more messy in here. Low, attempt the reversal, failure to get back in that range. These guys, since they're too weak to make the new highs, make the new lows. Reclaim of that with a hammer signal, continuation signal, attempts to make the highs. They get about 80% of this range. Reversal, and then they come back in trying to make the lower low, right? Because they're too weak to make the highs. But then you get the rev strat here, and this was the trade Tom put, and I retweeted it. Tom has a trade example. He literally traded this, the 1-2-2 with the 2-1-2 continuation add, and then it makes the higher high. So you see high, higher low, higher high. If we go in here, you can see slight higher high, 3 broadening formation, which is why we would like to be able to draw those out. You don't have to though. 3, they try to continue 3-2, but they reclaim it. Guess what? That changes the analysis. 3-2-2, fun to say, fun to do. They make the highs. New high day. Sellers come in with profit taking, fails to take the lows out, and then make a new high day again. Right, so in this case, takes out both sides of the range, but not just this bigger range, which again, this isn't like something I'm using every day. It's just an example of how the range in pre-market gets taken out over and over. So you can see on a news day, this happens more than once. Down, they try to bring it back up. They're too weak to do anything. Lower low, 3-2 reclaimed through previous range, higher high. News comes out, higher low, higher high again, right? And then back all the way back in. You can see they chop them up in here, the broadening formation. Lower low again, reclaim of the range, and then higher low, higher low, higher low, and then higher high gets taken out over here. Sideways, highs, back in, lower high, lower low, takes both sides of the range. Change my cursor. I could change the chart. Is this a little better or no? I'm trying to draw on the chart so you guys can see it. Maybe I'll continue to circle it. Another example here. Lows, 3. That's a broadening formation. So there's a 5-minute in here and it goes 2-2 and then boom, higher high. And they reclaim it again, lower low again. And there's some news in the morning, I imagine. In here, new highs, 3-2-2 fails. They make the higher low, which tells you higher high, and then you can see they're chopping them up in here once they're back through this, which is why we want back through previous range. Notice the difference. This is continuation, right? Anyone that's long in here, they're long, right? So they're just continually trying to stop longs out all morning in order to keep it going higher. Whereas once you get this broadening formation, now you have shorts, and you can trade back through that range, and you can see a slight higher high, and then reclaim pivot machine gun, they bring it back down again. Right, and then makes a lower low, lower high, higher low, and they're just stuck in here. They were stuck in here for, many hours. In here, low, reclaim back into the range, higher low, and you can see the broadening formation. Whenever a 3 occurs, that has to be broadening formation. So you see it makes a lower high and a higher low. All right, so they're stuck in. Poke down, reclaim, boom, higher high and a lower low again, like this. And then notice they fail to make the new lows. These sellers were too weak to do it. So when this starts reversing, coming back through, then you get that higher high, right? And this doesn't mean you can't trade this stuff. You can try and get in here, stops you out, so be it. 3-3 gets you all the way back through that range, awesome. Opens and goes red, you're forced to take profit or partial, right? Stops out break even, so be it. 2-2 in here. Awesome. Now we're going to try and take those guys out again. We should take this out. And then you get it. And then finally, you're in a winning position. And what you'll notice is if we just replay mode this stuff. So this is an analysis on the 15. If we drop it down, what you'll see is the same analysis applies when you're looking at these smaller time frames as well, right? So if you're going to be a scalper or a futures, whatever, sideways, poke up, 2-2 here, boom, instant winning position. Inside bar up, tries to make the highs, makes a lower high, higher low, and then you can see stuck inside again. Sideways, poke up, 2-2 reversal, boom, slight lower low to the mother bar range, reclaim 2-2 reversal, take it the other way, boom, inside down, flip it the other way, boom, right? And then in here, you're gonna see the same thing. From this high to this low, they get stuck, ranging sideways. They try to get down here and reclaim, they get stuck again, failing to make new highs. Then they make the low, they reclaim, now you're in, right? Higher high, so now you've gotten out of this stuff. Higher low forms, and now you know they're trying to bring it back up in here, but this is still all stuck, right? Because you'll see they haven't taken this out or this out, which is the only issue is like when you're playing things that have made a higher low, you have to be aware you are inside the bigger time frame, which is why we want all this stuff to trade back through. The problem is when you get in here, it makes this higher low, and then you're trying to trade back through just these guys. I'm going to remove the drawings. When you're just trying to trade back through these guys are not going to trigger high a day, right? But when the range is all of this, that could trigger high a day. Because if it comes back through all of those guys, you have like multiple hours, or let's just say, yeah, so you have like 30 minutes worth of shorts in here that are going to be forced to cover, which is the thought process. And what we want to trade is these nice long red and green bars. That's where we want to be. But we can go back in here. So it doesn't give you a better idea of entries. It is what an entry looks like. Like if you want to be long, you have to TTO and get in there. And it's always going to look like sideways or a range. You're going to aggressively sell and then counter that selling because you need a losing participant on the other side of your trade. So if we get this aggressive sell into the lows and then we get a hammer candlestick, what that's trying to do is like, okay, if this works, we take all these guys out, boom, this is my winning position. I'm in here. There's losing traders that have to buy way up here, and I'm already in. And then it can keep going, and you can hold and have this winning position that you can add to, you can partial it, you can swing it, you can do whatever you want, right? That's what it looks like. And if we know it looks like this, and our stops are tight, because notice this move in here through these guys, this move is like 5 times whatever your stop would be in here. So you can take these entries until they work. Meaning, and this is a bad example, it's not when I'm not suggesting trade stuff that looks like this, but this is the overnight session, and this is 3 in the morning when no one's trading. Here's your high, here's your low. Low, reclaim. You can just buy it there and put your stop down in here if you want. Right? Create the swing position. Here's your higher high. Fails to take that out though. Reversal. Higher low. Okay, now I'm going to try the higher high again. They did. Fails to take that out. Reversal. Lower low again. Here's your reversals in here. All these shorts in here, losing traders. Here's your triangle layout. Poke up, poke down, reversal here. Boom, higher high. Now you have this winning position. The buyers were strong enough to make the new highs. So they come in, they make the higher low because these are really strong buyers. That's what we'd be thinking. Then you get this pivot machine gun. And then you can see you come back through this range again. And the winning position is always going to look like that. Sideways, down, back up. Sideways, down, back up. Right? And the ones that don't work, so be it. Because the risk down in here, this is just an example in a 1 minute. If you're going to make 5 points and you're risking 0.5 or 0.25, it doesn't matter. So when we then extrapolate that to how are we going to trade, we're going to use the StratAttack universe, or we're going to use the Gappers universe, and we're going to trade triangle layouts. We're going to trade the things that set up like this. I'm not sure about SPY today. It's kind of been chopping this week. And see, this is a good example of one that just does not work. So be it. Here's your higher high. Notice the 2-2 reversal in here paid you the first time. Higher high, 2-2 reversal, magnitude hit, did what it was supposed to. Inside bar, reversal against. You just have to reduce because now you're stuck inside. What did they do? Lower high, lower low, reclaim, higher high, and they're restarting that series. So we take this. If it does not work, we know when to get out. If it does work, it pays for anything that we took that was a loss every time. And this does not mean trade everything, right? What this means is let the really obvious ones set up. You can take it, right? You can take this one, you can take this one, you can take any actionable signal. The thing is you don't want to take the ones that are chopping. Like if we go in here, you do not want to trade this. This is not what we're looking for. You want to mark that out and say, okay, this is all stuck inside of that. And then boom, penny lower. Now we can start going after it. Take it in here, make some money, stops you out, so be it. Try it again, make some money, stops you out, so be it. 2-2 here, 2, 2, 2, and it pays for that. And now you're in. Right, and this is still not even like an example. This isn't what we want to look for, but I'm just showing you, like, just stay out of this stuff. And then when things are actually moving, you can hit it, hit it, hit it. It depends on the person. Like if you're looking at this SPY and you're like 3-2-2 SPY, what could that create negator do? This is where the multiple time frame analysis comes in. It's like, okay, if this works and we take that out, we're reclaiming this mother bar. So we go to like a 15-minute. This is a 2-2-15. So if this works, all these guys take a loss because the magnitude of the 15 is here. And if that works, what does that do? It causes a 2-up 60. And we're still nowhere near high a day, but maybe it does it, right? So you can take this through the previous range to cause the 2 on the 60. With the 5-minute, that triggers the 15, that then triggers the 2-up 60. And if that works, we take these guys out. If we take those guys out, we're going to take these guys out too. Because if you're short and your stop's at high a day, which all the shorts have their stop up there, this is now trying to counter that. And what we'd want to do is not trade the SPY, ideally, if we're trading stocks. We want to go after things that are full time frame continuity and going. So if we go to like WIN, for example, this is one on the macro video we mentioned. And you can see, is it obvious what we're looking for? Yep, 3, sideways, 2, 2, boom, hit it. It's already up 9% this quarter in less than a week. Right, just goes, right? So then we go in here. Intraday, this is what we want to trade because this is where the buying's occurring. So you see it goes up, stops people out, 2-2 reversal, up they go. I mentioned that yesterday morning on the stream. This morning, here's your sideways inside bar range. And you'll notice this whole strategy is just a rev strat. This is what we want to be trading, not SPY, because this is where the aggressive buying is. So when it goes sideways, sideways, boom, 225er in. 1-2-2 rev strat in. 225er in. 225er again, in more. You see? But you're not going to get this really obvious stuff unless you got these big signals in force back through a previous range, which is why we say you got to start the big time frames. And now you're like, Alex, how do I do that? Well, you can go to the quarter and you can scan who's in force this quarter. And you can scan, let's say I want a 1-2-2 rev strat. I don't know if we have any. We'll say we want a 3-2-2. All right, VRTX and WIN, 3-2-2, fun to say, fun to do. So VRTX in this case is 3-2-2 bearish, right? And today is a 1, so we don't want to trade it because they're not aggressive today. If we go in there though, you'll see we can still create winning positions even though it's an inside day. We would prefer not to. We want things that are moving. So near miss, right? Tried to make the slight higher high, did not, but inside down, buyers were too weak, boom. Right? And then 3, poke up, 2-2, boom. And then low a day, this is why it's called exhaustion risk. Because when they reclaim this, no matter what your continuity is, you're at exhaustion risk. Those sellers could be done selling, and then you have to stop guys out. Thoughts on custom timeframes? Do whatever makes you happy. Because the strat, it doesn't matter the time frame. It could be a 12-hour chart. What's his name on Twitter? Ace on Twitter. He is using this strategy called, it's the 12-hour rev strat strategy is what I'm going to call it. But all he's doing is playing the 12-hour potential 3. Because this is all we're trading, right? We're looking for a sideways range and then a failed 2 go 3. Sideways range, failed 2 go 3 back through it. Sideways range, failed 2 go 3 back through it. You see this one does not work. If we go in here, sideways range, 2 up in red, back through it. Sideways range, goes through it once and then twice, right? So this is, you can do whatever you want, right? The simpler the better, ideally. Now, let's say we're looking at SPY right now. This range is sideways, right? So we'd want to do what? We'd want to stay out of that. Let's say it were to reclaim off like a 5 minute, we'll say it's a 2-1-2. Well, if that works and it takes these guys out who bought from 570, big problems, right? Because we reclaim and now we're going back the other way. What that would cause is these guys to take a loss here. Maybe that could trigger this, and that'd be a huge problem. And then we would ask ourselves, well, is there signals to do that? We're nowhere near a 15 reversal, nowhere near a 30 reversal, nowhere near a 60 reversal back down. So meh, right? Maybe, maybe not. So let me show you the China names, for example. Baba. We're trading it last week. Why were we trading it last week? Because it went really green on the week. We knew those buyers were really aggressive. And we call it the strat attack. When they buy Monday, 2 up, and then they buy Tuesday, 2 up, it tells you they have more to buy. It's coupled with good news. So it's called a story stock where you have news backing the move. It goes up 9% to start the week. So come Wednesday, Thursday, Friday, what are we looking for? We're looking for a triangle layout and a buy. What does that look like? Looks like this. And let me go back to regular. It looks like this. The lower low, reclaim of that low, and you can see it actually made a high, a higher low, and then continuity, boom, higher high, and then broadening formation, micro triangle layout in here. Poke down, poke up, poke down, but you're nowhere near taking these guys out. So here's your uptrend. Low, lower high, higher low, and they keep going. The best example of this was Futu. Right here, the gap down. First they get short. Awesome. We love to trade against losing traders. 2-2 reversal. What does that do? It reclaims this range. Where's that going? Up here. Why would we hold that winning position that we just created? Because the week is up. From Monday's open, when this trade triggered, it was up 10.65%. If it's going up 50%, it's got to go 10% first. And guess what? When we go on the day, it still has yet to reverse. The 2-2 day in here, momentum hammer here, and then 2, 2, 2, 2, and you can see another gap down buy. We also mentioned this one on the stream because it's the same exact thing when we go in here. Forgive me in here. Oh, actually, no, it's not Futu. I think it was like Baidu and Baba, one of the two. But I think you guys understand the point here. Go to Baba, for example. What happened? Poke up, triangle day out, 2-2 reversal, reclaim the range, 2-on-2 continuation, 2-on-2 continuation, boom. Right? No reversal against it. It has to be going to take that out. And this is like the key. If you can understand, I need this bigger time frame going, and then I'm going to go in the lower time frame, and this is what a long position looks like, you're set. Because you could do this all week. The inside bar up, 2-2 reversal up. They're stopping some guys out, profit taking, gap up, sell, which you can short it down too. And then 2-2, flip all your shorts long, boom, add, high a day, awesome. And if we go to down in here, the gap down buy, triangle day out. And then in here, you can see it's chop, shop, which makes it more difficult. So the last thing, maybe we could add this in here. When you see this pattern like this, if you have this bigger time frame uptrend, so again, like let's say we have this hammer month in force, the monthly chart looks something like this. When this occurs, what you're looking for is people profit taking, trying to reshort into this, because we're nowhere near taking this out. That can be expected to go higher or low because this buyers are more aggressive. Like the month is up 10% at this point. So when this occurs, you're like, profit taking, right? And then when it reverses again, add. Right? And it might look like Head and Shoulders or whatever. It's not going to look like that every time. It's simply a concept that I'm trying to put in patterns so people get it. Because it could look like this. It could go up, can go down, and then it can go up and go like this. Is that Head and Shoulders? No, it's not. Right? But it's the same thing. The low, the reclaim, the new high, slight profit taking, and then measured move, boom. Right? It's the same thing as this. But this, all the things that ICT traders are trying to trade, this is actually like when price action's really weak, this is what it does. When it's strong, it looks like this. In fact, it'll go like this, and it will just never come back. And when it retests in the future, it'll actually go like this. And it's going to use that broadening formation as support. It's not going to get anywhere near order block or a 50% or anything. All the strong stuff never does that. Yep, this is going to be on YouTube. But is this making sense? Can I see some charts? Anyone that's at their computer right now? You can see the 60 when it went 2 up. Where are they going? They're trying to go up there, right? And you can see on the 60, we have no broadening formation here, but what do we know? Here's the morning 60. They made the low, they reclaimed the range, and now where are they trying to go? The other side of it, right? So it's not always going to look like a head and shoulders or whatever you'd like to call it. It's just understanding it occurs. The higher low, the higher high. Here's that profit taking, right? And then whammo, takes the 15 up. We literally said that was going to happen, didn't we? As we were teaching it. So now, what's your trade plan? Your trade plan is either get those big quarterly signals in force and go play those all quarter, or alternatively, you can say the same thing, but find the biggest broadening formation that you can and trade back through it. The bigger, the better. Because the bigger the range is, the more likely it actually is to take both sides of it. Does not mean the signal is, so like, let me go to Lulu. For example, this is something we called out on Twitter. The high, the low. When this comes back in and reclaims, does not matter if it goes 2-2 here. I do not care. I want to see a lower high, right? And it goes lower high, lower low, all the way down in here. So when we look at this, your entry, the first entry is always continuity, the change in continuity here. The second entry is going to be either the reversal actionable signal or the first triangle day out. The reversal signal is preferred because more often than not, it'll go like this, 2-2 and then whammo, right? But if it does not work, your analysis has not changed. This is still the broadening formation. Doesn't matter if it goes sideways here for 3 months. Still the broadening formation. You're just looking for the triangle day out. So when you go in here, prior to earnings, is it obvious? Sideways, poke up, and we want it to go down on the bigger time frames. Boom, kicking pattern. And then it starts the puke. Do I have a tutorial? Yep. If you go to my studio, or my YouTube, I mean. Oops. So you're going to see it here. Master scanning the stock market. We talk about confirming and negating, why that's important, especially when you're referring to setups that look like this, because the continuity tells you how much evidence do you have it's going back through that range. So you have the biggest broadening formation, and if you're trading a quarterly signal, you have continuity, or a yearly signal, you have continuity. But if you don't have signals, you need to have at least continuity to go and do that. Because like, for example, if we go to Home Depot, and maybe it's not the best example, like in here, right? So 2-2 reversal, when this goes continuation, we have continuity, right? And we also still have magnitude because we got to take these guys out, the slight lower low, the reclaim, and then it's going up there, right? So during this month of trading, just the fact you have continuity tells you can go and trade those triangle day out entries. And in this case, there's going to be a lot. They're very aggressive, and this is an example of what we were talking about before, where when they're really aggressive, it's going to go like this, right? But you're still going to see the really small triangle outs in there. So slight triangle out in here, triangle outs in here, that reclaim with the RevStrat. The slight triangle out in here, right? You can see the gap down by, slight triangle out in here. Here's your 3, that's a triangle day out, reclaim, boom. And do you see how easy it is when you have nice long green bars and you have a lot of evidence that's going up? This is where the easy money is made. It's not made in this stuff where it's like, oh, market structure shift and this, and that. And then it's like, no. Once this is bright green on the month, then we go after it all month. Kicking pattern, I have a video on it. Just type in like the most explosive day trading pattern, Alex's options. You'll find it. XOM, yeah, the energies are a great example. So this is what we mean when we say we want it on the biggest time frame with the biggest broadening formation. Here it is. 3, poke down, reclaim, higher high. Reclaim, lower low. Inside bar actionable signal all year last year. Boom, 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 pivot machine gun. And they still have not made the high, or actually, no, they did. So you can see inside year up, they're still reconfirming. So if you bought it last year, or not, or 2022, I mean, 2024, you add to it, and then your whole stop on that position is the reversal, rev strat against you. And there's a question. Why, even though Boeing is a 2 on the year, does the month have more favor? Why is the month stronger? Because everything must be confirmed or negated. The year on XOM is 2 up. The 2 down month negates the year. The 2 down month negates the year. The 2-2 reconfirms the year, but they were too weak to do anything. The 2-2 month negates the year. The 2-2 month down negates the year. 2-2 reversal month confirms the year for control, back through a previous range of people to stop out, back into 95.21, putting us closer to make the new high, putting the year signal back and forth with losing traders against our trade. And you'll see, when we traded it at the beginning of 2024, the 312 gave us the same PMG setup, back through a range of losing traders that were short to trigger the year in force. It just did not stay. So when this goes 2-2, we just got out. And that's still easy, free 7, 5, 6%. And when you trade this and it doesn't work, you have tight stops. We're not risking $10 on this. Like XOM, where's the signal? 3-2 week. If you are a swing trader, you will risk 4%. If that's your prerogative. Where's the better entry? The 2-2 day here. Because they poke up, they poke down, 2-2 reclaim, boom. All these losing traders here take a loss. Momentum hammer. Where's another way in? Well, when we put it on the strat attack list in the morning, the 3-2, the triangle layout, and then continuation of that expanding in the direction of full time from continuity. Where's the next best entry? They triangle layout, go on to the 60. Triangling layout, right? Shorts getting short, and the shorts way too weak. They couldn't even make a lower low to that. Right, 2-2 reversal, get in, boom, 2-1-2, 2-2-2-2-2-2-2-2, 2-2-2-2, coming into that final target. You can see we go back to that 15 setup, and we're probably going to call it all quits here. But notice, why does it stop here? Well, we got no one else to stop out besides high day. So you go up here, everyone's long, breaking out, right? We have higher lows, everyone's long. So we got to stop some guys out, right? Go to the 5 minute. What does that look like? These 2 bars go outside of that. So if we're going to get a big move, we would like to see them back through that range to go and try and take high day out, right? And let's say that doesn't happen. We go 2 down again and we start reclaiming this. Then we might have some more issues, but for now they're not. And people will say fair value gap, this and that. The fair value gap, when you see it, does it show aggression? It does, right? But what it's actually showing you is lack of people that you can stop out. So there's a fair value gap here. We just blow through it, right? It doesn't matter. And then we stop these guys out. And then guess what? That 5 minute signal exhausts right here at 569.69. It opens the new one and that signal's over. So is this the fair value gap doing this? No. Can you use the fair value gap to identify where there's exhaustion risk intraday or on bigger time frames? For sure, go for it. But it's the fact we're nowhere near taking any of these guys out. So we stop out 10 minutes worth of guys here. These guys long in here, they can stay long. Their stops are down here. And then they try and buy. We stop those guys out. Now we have trapped shorts. We can take it up into here to stop the shorts out. And it takes the highs with the 15 reversal. Then same thing. Triangle they out. Is it the fair value gap? Nah, it's just the fact that these 2 bars go outside of that and there's no magnitude after that. We're nowhere near taking these guys out. Right? So if we can get a new signal, we can pop up above these guys and hand it to them. Yeah, let's look at NVIDIA. How do you get in on NVIDIA when it goes RevStrat year right in here at the beginning of the year? Well, triangle layout on the year. They make the slight lower low. Boom. New earnings. They come for it. Lower high. Higher low. Right? Then you have this whole range of losing traders. The year is bright green. Inside up right in here. Boom. Blast them out. 2-2 reversal. They try to get the new high, fail to do so, so they're trying to make new lows. They do. Then they stay down. Gap down, buy, coming back into these losing traders. 2-2, boom. Fails to make the new high, so these buyers are still weak. 3-2, puke. Takes this out, nowhere near this. Is there a fair value gap in here? Nah, right? It's just the fact that we're nowhere near taking down here, 90. So when it takes out 106, nowhere near 90. If it keeps going, that's fine, right? It's the fact that it does that, and then it changes this continuity on the week, and now these losing traders trying to go the other way, and we're trying to form a higher low, which tells us these sellers were not strong enough to make the new lows again. Because they made the new lows in here, lower high, so the buyers are weak. Sellers tried to sell it down. They're too weak to take these guys out when this continuity changes. So now 2-2 reversal, 1, 2 up, 1. It's still trying to take that. I think that's all I've got for you guys today. Is this making sense? And for those of you guys trading futures, I want to see this. If you're one of those funded chat people, I want to see you guys using this. Because it will help you. The people that are going in and out all the time, not what we want to do. You want to be patient. Let them set up obvious reclaims. But that is all I got. It's around noon. I've got my birthday dinner with my girlfriend tonight, so I'm going to be busy this weekend, and I will see you guys, for those in the community. Maybe we do something like this again, I'm not sure, but I will have the video out on YouTube later today. So have a great rest of your week, and hopefully you guys can implement this and have some success. So I'll see you guys then, and adios.